Hello once again and welcome to the show. Well, it would appear that sellers are being quite encouraged. They're willing to test the market, as Kevin Brogan from CoreLogic will give us more details in just a moment. Outsourcing will dramatically improve your productivity and profitability. Sure Agents have created a staffing solution to provide great staff who can perform duties in property management, sales, marketing and administration, and at a fraction of the cost, giving you and the team more time to spend on the dollar productive tasks. With rising costs and slowing revenue, the focus must be on value for money. Check it out, sureagents.com. Welcome back. Yes, and as I said at the opening there, sellers are willing to test the market. Kevin Brogan joins me. Hi, Kevin.
Hi, Kevin. How are you?
Yeah, good. Now, this is based on a number of factors that we'll work through today. And also in this show, we're going to have a look at a really great report that came out from CoreLogic during the week, which takes an in-depth look at what's behind the auction reporting and some of the interesting statistics that have come out. But let's bring up firstly the preliminary clearance rates. We can see a couple of things from that. I want to talk to you about withdrawn listings. They seem to be declining as well, Kevin.
Yeah, look, we saw this this start last week, but it's true again this week. Obviously, the number of auctions that have taken place is very much lower, which means that we didn't have that large number of auctions that had been listed and then due to the coronavirus restrictions had to be put on ice.
Yeah.
So look, these figures are showing us. If you look at Sydney, you can see a clearance rate of above 70% there. And that is higher than Melbourne. And of course, I think part of the reason for that is the lifting of restrictions on on-site auctions. Okay, well, we will look at that a lot more closely later in this report. But Melbourne 60.3, Brisbane 50%. But I guess we've got to remember here too, Kevin, probably with the exception of Canberra, we're working off a lot fewer numbers, aren't we? Yeah, look, I mean, compared to this time last year, Sydney has got a lot fewer than half the number of auctions, and Melbourne is probably sitting at around a third of the level of auction activity. And I think it's also worth bearing in mind that this time a year ago was immediately prior to the federal election. So it really was only after that election that we started to see the market recover really strongly. So, you know, even at a time when last year auction numbers weren't strong, we're actually sitting well below that now. Okay, well, I want to show you the worm in just a moment, but before we go to that, we want to feature a top sale out of Sydney. This one came out of Manly, was sold by Clark and Hummels, Cherie Hummel and Michael Clark. This property sold for $2,949,000. It's in the Mirage building in Manly. Kevin. Yeah, so look, this is right on the coastal reserve overlooking Queenscliff Beach, and this property was actually last sold in 2015 for $2.35 million. Population of Manly has increased by about 5% over the last 5 years. Average length of ownership 12.1 years, and the median price of units in this suburb has gone to 1.3 million, which is slightly down on the 2018 peak. Well, have a look as we look through this property, just why it did achieve almost $3 million. Let's have a look through.
We've had the absolute pleasure of selling some of Manly's most stunning beachfront apartments recently, but none so well positioned as this. An amazing, beautiful renovation in Mirage, one of Manly's most prestigious security buildings. You have to see it to believe it. A full-length terrace bathed in northeasterly sun, and all bedrooms have views of that stunning Pacific Ocean to Manly Beach and the coastline. Offering a huge living space and generous sized kitchen, this layout is perfect for downsizers, executives, or even young families. For those of you who aren't familiar with this particular pocket of Manly, the location is exceptional. Cafes, restaurants and shops at your doorstep, a short stroll to Manly Wharf and just a 20-minute ride on the fast ferry to Sydney CBD. The location just doesn't get any better. This is a once-in-a-lifetime opportunity in a dream location, a highly sought-after building. It will be snapped up very quickly. Come and view it for yourself.
Yeah, quite spectacular, and as was pointed out in that video, Kevin, wonderful views, wonderful ocean views, and very close to a lot of activities. I want to bring up our next graphic for you now, which is the worm. We haven't featured this in a while. The reason I want to do it, we'll have a look at the broad version firstly, which takes us back to 2009, but we can see that very big dip that's occurred, and we'll in a moment bring up an even closer image of that. But it's really interesting to watch the worm and what's happened, and you can see here how dramatic that drop off has been, Kevin.
Oh, absolutely. I mean, it really does coincide with the moment that specific restrictions were brought in relation to auctions. Don't forget that fall that we saw there really did coincide with the fact that those restrictions came in when we had the busiest scheduled weekend for 2020. It was actually about 3,000 auctions were scheduled for the week when the ban came in. So it had a really dramatic and immediate impact.
The reason I want to bring up the next graphic is because it's a much closer view at the last 12 to 18 months. And you can see, the reason I want to bring this one up is because you can actually see what's starting to occur. Certainly the preliminary numbers from last week lifted a little bit, and the prelims from this week are showing an even more encouraging sign, Kevin.
Yeah, look, I mean, we're definitely seeing a recovery in the clearance rates. It is in the context of there being much lower auction activity overall, but it does show that the right property is still achieving success, under auction conditions.
Okay, well, we'll just take you into a top sale now that occurred in Brisbane. This was in a wonderful suburb of Hamilton, one of Brisbane's most affluent suburbs. It was sold by place, $1,720,000 for the property at 123 Crosby Road. We'll just roll the video while we talk about this property, but only 3 families have owned this since it was built in 1937, Kevin.
Yeah, look, this is a beautiful home. I mean, it has been held for a long period of time. As we discussed, the length of ownership is an indicator of how tightly held, just over 10 years. In Hamilton, last sold in 1996 for $255,000, just to give you an idea of the capital growth over that 24-year period. Yeah. Population has increased by 48% in Hamilton over the last 5 years. So obviously not all accommodated in homes like this, but very much in demand, being so close in to Brisbane. And the median price reflects that, $1.53 million, which is up 18% since 2018.
That increase in population that you mentioned there too would have to largely be due to the number of units that have been built in that area. I would think there's a lot of units being built down around the river, so that would allow for that increase, I would have imagined, Kevin.
Yes, absolutely. As I said, not all of that population housed in homes as beautiful as this one.
Okay, I want to take you to the tops, or one of the top sales anyway, out of the ACT. And this one's at 41 Archer Street, Dixon. The agent will take us through. Ryan Headley will walk us through this one in just a moment. LJ Hooker selling this one for $930,000. Dixon is one of the suburbs that we have spoken about in the past in the ACT, Kevin.
Yeah, look, it's about 4 kilometres north of the city of Canberra, and this property is on a corner block, so it's slightly larger land parcel than you often see in Dixon. Population's been relatively stable there. Average length of ownership 12 years. Again, speaking to that fact that this is one of those areas that's relatively tightly held. And the median house price is 884,000, which is actually up on 2019 by about 11%.
Well, here's Ray Headley to walk us through the property at 41 Archer Street in Dixon.
Located in the heart of Dixon is this positively gorgeous 3-bedroom home that has a modern touch whilst maintaining a traditional feel. A 5-minute walk will have you surrounded by countless shops and restaurants in Dixon, or if you're up for a change of scenery, Ainsley Shops is just down the road. This home is ideal for the family that wants to take advantage of outdoor living, with multiple entertainment and play areas around the house.
Thanks, Ryan. Yeah, lovely property and well represented there by Ryan as well. Okay, we're going to take something we've been doing over the last couple of weeks is take a more detailed look at some of the stats behind what is happening in the market. As I said at the top of the show, a really great report coming out from CoreLogic during the week that I guess in a way demystifies, Kevin, some of the stats in behind the auction numbers. And I thought this would be good for us to talk about today. Just as a prelim before we do start, just to remind you that 25th of March was actually the time when real estate agents were temporarily banned from hosting open property inspections, open homes, and also on-site auctions. This had a very big impact. We'll bring up our first graphic for you because I think this talks about the change in the dynamic of how some of these properties were both presented and sold, Kevin.
Yeah, look, I think it's really important when you're looking at something like clearance rates over time that you don't change the methodology. And there were some real challenges coming out of the coronavirus restrictions. And the most obvious that you can see on this graph is the sort of background level of withdrawals was around 6%. And then that suddenly spiked to almost 50%. I think it's 45% nationally. Now, those withdrawn results are counted as being an unsuccessful result. So that 45% withdrawal rate comes out of the potential pool for clearance. And that's why we saw such a big drop in the clearance rates. If you also have a look at it, the number of properties sold prior to auction, the real challenge facing real estate agents when there was a very sudden cessation of auction activity was, well, we've got all these properties listed. What are we going to do in terms of marketing and selling them? And so some of them went to online auctions, but a huge number moved to taking offers before auction, and a large number of them were recorded as sold prior to auction. And in fact, sold prior to auction figures actually outnumbered sold at auction figures quite significantly during this period as well.
I'm going to move to our next graph too, and I'll ask you to give us the story behind this one, Kevin. But withdrawn properties, as you've indicated, increased rather dramatically. Total number of scheduled auctions also came down to the weeks after the nationwide lockdown. This graphic, as a result, withdrawn rate has since come down. We noticed that and made a mention of that in today's show as well, Kevin.
Yeah, look, that's definitely the case. So for the last 2 weeks, we've been looking at auctions which were actually scheduled after the restrictions came into place. So that accounts for the very much lower numbers, but it also accounts for the fact that agents were actually set up to deal with the sales of these properties most effectively without sort of having to change their method in the middle of the campaign. And I think the other thing that we're seeing in parallel with this, particularly in Sydney at the weekend, is not only the reduced number of withdrawals, but actually the number of properties sold at auction outnumbered the number of properties sold prior to auction. So it showed that vendors were actually willing to take the chance of leaving their property to go to auction, or they had the confidence to leave the property to go to auction rather than accept an offer prior.
Yeah, it's also good to see because agents have a big influence on this as well as to whether an offer is accepted. Ultimately the decision is always up to the seller, but the agents do have somewhat of an influence. So it's good to see both consumers and agents, re-engaging their confidence back into the auction method Kevin. I want to bring up the next graph because I think this is a continuation of what we're looking at here, but we can clearly see here a decline in auction volumes, also partly attributable to the Easter long weekend, which typically sees very low levels of listing and buying activity. Tell us what you see here, Kevin.
Yeah, so that's right. And we also obviously had Anzac Day falling on a Saturday as well, which basically reduced very significantly the number of auctions in Sydney and Melbourne, and would do if Anzac Day fell on a Saturday in any other year. But you're right. Whenever we look at auction results, we have to look at them in the context of what interruptions to the market there are, with public holidays, for example. So we did see a very significant drop in auction numbers. Undoubtedly, there was a coronavirus component to that, but Easter and Anzac Day in particular often have a big impact, especially when the two holidays actually come together and people take take the opportunity to take a long holiday with relatively few days of annual leave expended. But look, we've definitely seen volumes now really hit a sort of a coronavirus attributable low level of activity.
On face value, in the past, we've always said that clearance rates implies housing values could follow. Is that necessarily the case here, Kevin?
No, not on this occasion, because you mentioned just now that it really is up to the vendor about whether to accept a lower price, and what we're seeing at the moment is both vendors and purchasers choosing, in some numbers, to defer their decision to sell because of the support mechanisms in place with JobKeeper initiative and banks giving holidays of mortgage repayments. We're actually seeing that a deferral to sell the property is much more likely an outcome than accepting a lower price. And the fact that also that vendors aren't bringing new properties to market means that we've actually had a drop in supply and a drop in demand simultaneously. Whereas in a normal economic downturn, you'd probably see people looking at the writing on the wall for a long downturn in activity and being prepared to accept the lower price. A lot more stock on the market compared to the demand, driving prices down. And we're not seeing that after about 8 weeks of coronavirus impact.
Yeah. Kevin, just wrap it all up for me. Just give me your final impressions on how you see the market moving forward, given the fact that, we're getting back to auctions, on-site auctions. We're starting to see open homes opening up again. Is that going to have much of an impact, do you think, on numbers and prices?
Yeah, look, I think it will. We've got our restrictions being lifted in South Australia tomorrow, and look, I think it's going to create a sense of greater confidence in the market, but it's going to be a moderate increase because obviously there's still a large number of people who are employed in areas of the economy that are still going to be affected for some considerable time, typically entertainment and tourism. But I think looking forwards, we're going to see some more listings, some more purchasing activity, but all of that is dependent upon the very measured lifting of restrictions and continued success at containment of the coronavirus.
Okay, we'll just get back to our preliminary clearance rates before we leave you. Just to remind you, Sydney 70.8%, Melbourne 60.3%, Brisbane 50%, Adelaide 61.9%, and Canberra 61.8%, giving us a national weighted average of 64.5%. Kevin, any indication at this stage as to what the auction numbers are going to look like next weekend, or is it too early to tell just yet?
Oh, look, we've got some preliminary numbers in that look as if there's going to be a slight uplift in activity, but it is only slight because we're obviously vendors who are affected by this increase in confidence with the removal of restrictions are probably going to need at least a 28-day auction campaign if they do react to it by bringing their property to market.
Kevin, always great talking to you. Wonderful insight too, and I'm enjoying our conversations as we extend to more than just auction results. So thank you very much for your contribution to that, Kevin. Kevin Brogan will join me again on Friday. We'll have a look at the week ahead, and we'll give you the final numbers for what has been somewhat of an encouraging week. Kevin, thanks again for your time.
No problem. Thank you very much, Kevin.